We asked you your thoughts, and you sent us a picture of Lucy and Charlie Brown. And Charlie Brown was trying to kick the football. Look at that. As Lucy pulls it away. Who's Lucy? Who's Charlie Brown? And who's the football in this picture?
We're Charlie Brown and the president is Lucy. For the last few months, we've heard that the negotiations are going very well. They're expecting a deal. Our market has rallied nicely. Over the weekend, the president pulled the football away and said, I might not ever do a deal. Market's down 500 points. There was a guest on earlier that was talking about China getting hurt worse than the U.S.
Gordon Chang.
They might be hurt worse than the U.S., but rest assured, the U.S. will get hurt. The fourth quarter was the worst fourth quarter in a decade. A lot of that weakness was due to fear about tariffs and the trade war getting worse. This quarter has done very well because the trade war is calming down. If the trade war heats up, rest assured, we will not have a good year in our market again.
I guess the question is, how much of the first quarter's big run, this huge rally for stocks, has been on optimism about a good, and I use good only as for both parties, good follow-up to the trade war versus solid earnings? What do you think?
It's been a combination. Companies in the fourth quarter talked about the economy slowing and concerns about China and concerns about tariffs. That really went away in this quarter, and as a result, businesses were able to do well. Earnings season has been okay. The Fed has changed course. All of those things were pretty bullish. If we were to have an escalation in trade and tariffs right now, we think that U.S. companies would start to slow down again. The global economy would slow down again. So it would be pretty negative for the global economy and then negative for U.S. companies in our markets.
So do we buy on this sell-off, assuming we get one? I mean, the futures could turn around, but it doesn't look like it. Would you be a buyer on the sell-off, or is this the beginning of more market pain to come, given that many believe that our valuations indicate we are priced to perfection? Everything needs to go well.
We don't think we're priced to perfection. We think the market is about fairly valued. We think if a deal is done, if this is an ugly negotiating technique and a deal gets done in the next week, 2 weeks, 3 weeks, we think our market should do better. We are expecting volatility. Our best advice today is if you've liked individual companies, everything is going to get marked down today. Use these sell-offs to buy individual stocks that you think are good over the next 6 or 12
Quickly,
months.
what would you be buying then?
Well, look at the market, what's going down. Google's going to be down a lot today, probably along with technology. We like UPS here. CBS will probably be down. Again, everything's going to get marked down. You're getting things at a 5% sale. If you've liked stocks before, cherry pick today. But we wouldn't jump in wholeheartedly, but you've got to have a 6 or 12 month time.
We